The World Bank has warned that with weakness in major economies, global trade and manufacturing suffering as well, there is a possibility of a downturn.
The World Bank has warned that with weakness in major economies and global trade and manufacturing issues, there's a possibility of a downturn.
We are going through the sharpest slowdown on record. So in addition to that, when you look at equity markets, when you look at credit markets, when you look at basically overall tightening of financial conditions, there is this possibility that the slowdown is going to get deeper as we get towards the end of this year and early next year.
The impact of global interest rates will affect people living in South Africa.
Should global interest rates continue to rise quite rapidly next year, we could see capital outflows from the country, weakening the rand exchange rate even further. This could result in a higher import inflation, and this could keep the Reserve Bank much more hawkish than otherwise would have been the case should we have seen a much shallower global hiking cycle. Having said that, we are not projecting a recession locally, but the risk is always there.
Inflation is a global concern as prices of food and energy bite across the world. It's a challenge that people in South Africa are dealing with. A financial planner suggests, in the midst of concern about slowing growth and rising interest rates, staying calm and trying to minimize financial challenges to prepare for any downturns or even a recession.
Try to minimize the usage of new types of debt and make sure that for the existing debt, you pay it off aggressively.
Because the current financial uncertainty is a global issue, the solution needs to be dynamic and multifaceted.
Reduce inflation to target ranges in advanced economies as well as emerging market developing economies. This requires credible, consistent, and clear policy messaging on the parts of monetary policy authorities, the central banks. On the parts of fiscal policy authorities, it's going to be critical to have a medium-term fiscal plan that basically gives a priority to debt sustainability, but at the same time, having support to most vulnerable segments of society.
And for those with investments?
The worst thing you can do is disinvest. Stay put no matter what happens, stay invested in the market.
Mtsinga Kunta, SABC News, Johannesburg.